So today we are going to discuss the topic of business with foreign countries. We will also be covering the actual step-by-step VAT returns. So it's going to be a bit of a long one, and you are welcome to drop your questions in the chat so that I can get to the questions afterwards. Of course, after the training, you can still reach out to me. As part of this training, I'm offering a complimentary session to the participants. So other questions of yours can be addressed in that session as well. In the first session, we had looked at the basics just to understand the backgrounds of VAT administration in the Netherlands, because it's important that you have an understanding of the theoretical and legal framework of the VAT administration. That way, you know what to do and the reasons behind it. And even if you subcontract someone to do it for you, you understand what the person is doing. You are able to ask questions when something is not clear to you. So today we are looking at services to other EU businesses, deliveries to EU entrepreneurs, and then there's what is called intra-community supply. That is when there is transaction between other EU countries. We're also looking at online sales to private individuals within the EU. That is basically e-commerce. And then services to private individuals within or outside the EU zone. Purchases from other EU businesses and export outside the EU. When you offer service to another company within the European Union, reverse charged VAT arrangement becomes applicable. And this implies that whoever is receiving that service is responsible for declaring the VAT on that service. And this is applicable to other EU enterprises. As you are based in the Netherlands and you offer service to someone in Belgium, in France, in Germany, and that other party is a business, then a VAT reverse charge arrangement is applicable. But you must verify that this customer is a VATable entity. You verify this by checking the central online, there is a central website for the EU zone where you can check the VAT ID of your customer. You must also state that VAT ID on the invoice. You have to also mention on your invoice that VAT is reverse charged. That way, you will not include any VAT on the invoice. You will then have to declare this service in your VAT return, Section 3B. Then you go a step further to declare this service in the intra-community performance declaration channel. These are the rules that the European Union have entered into to regulate transactions between companies within the EU zone. When we get to the practical side, you will have a bit more understanding. So we just talked about services to other EU entrepreneurs. Now we talk about goods. If you sell goods to another company that has a valid ID within the EU, those goods have to be transported to that EU country. Then you charge zero VAT rate. Your customer will be the one to calculate the VAT at his end and declare it in his or her country. Again, you have to note on that invoice is subject to reverse charge directive. And there is a section of the law that you need to mention on your invoice. OB Act 1968. You then have to report these sales under Section 3B of your declaration. It will also have to be mentioned on the ICP declaration. I talked about verifying the VAT ID of your counterpart customer in another EU location. This is the website where the EU zone have, I have put all the countries within the EU. Here you can validate a VAT ID, confirm that it is valid. Then you can treat that customer as an entrepreneur for VAT purpose. If you cannot validate the VAT ID of that customer, then a different treatment will be used. You cannot use the reverse charge treatment. I already talked about the intra-community supply, that is the ICP. Whenever you're supplying goods or service to companies in other EU countries, it is seen as an intra-community supply. You have an obligation to submit an ICP declaration. This is an extra declaration outside of your regular VAT returns. And this you must send to the tax authority to show your turnover with customers outside the Netherlands, but within the EU zone. When you supply goods outside of the Netherlands to other EU country, you have to be able to show evidence in case you are asked. And this can be the order receipt, it can be delivery or transport receipt, it can be order confirmation or an email to show that indeed there was an order, the address of the person is outside the Netherlands. There is an evidence to show that you shipped that goods from the Netherlands from the Netherlands to another EU location. Now, VAT on e-commerce. A different rule applies when you are selling via online platforms. Most of the time, the people buying online are private individuals, and so they do not have VAT IDs. And a different rule applies. And that rule is that if your total sales outside of the Netherlands within the EU is less than 10,000, you can still declare under the Dutch VAT rate and just declare it as a normal Dutch VAT returns. The moment your sales is exceeding 10,000 euros, it is an agreement within the EU zone for you to report the VAT for each respective country in those respective locations. And there are two ways you can do this. You can either register individually in each of the countries that you are selling goods to, or you can make use of the one-stop shop, which is what the EU also devised, a one channel where you can populate all transactions you have with different countries within the EU. And then in that system, they reconcile between different countries. Of course, a lot of people will go for that one-stop shop. It is a system, you register in that system, and then you can report the VAT transactions with other EU countries in that platform. And this is for transactions via web shop, distance selling to people outside of the Netherlands, but within the EU zone. So I just talked about the one-stop shop. It is called Enlocket system in Netherlands. And here you can register by logging into your belastingdienst.nl. You log in and you can see e-commerce and you can start registration for one-stop shop. So if your business is e-commerce based and you are looking to sell to people all over Europe, it is advisable to register for this the moment your business picks off. Because once you have made sales that is up to 10,000 euros, you are expected to meet the requirements of reporting the VAT for each of the countries. This rule is set up so that every country will benefit from transactions that go through its location. But when it is within 10,000 euros, it is agreed that the country where you are selling from can receive that VAT. The moment is beyond a total of 10,000 euros, then you need to begin to report it to the other locations. And you can do that easily through the one-stop shop system, which you can register in advance for. Because it takes some time to get approval for this, it's advised to register in advance. Now, if you are offering services to private persons, now you're not selling goods, but you're offering services to private persons. In most of the cases, you have to invoice them locally and use the VAT, the Netherlands VAT returns rates and rules, and file the VAT returns locally. There is also a tool on the website of the Belastingdienst that you can use to check for your specific service what is applicable. I will share that tool as part of the notes to these sessions. Now, we've talked about you making sales to other EU countries. What about if you are buying from other EU countries? We buy things from Amazon sometimes, from Google sometimes, and they are not located in the Netherlands, or their address is not in the Netherlands. Sometimes they are registered in Ireland. What happens when you buy from them? Now, if you provide your VAT ID to these companies when you're buying, they will treat you as a business person and they will not apply VAT. They will sell to you 0% VAT. Then you are required to settle that VAT here in the Netherlands. And if it is also a service that you're procuring, the same is applicable. Reverse charged rule is applicable to it, and you have to declare the tax yourself here in the Netherlands. For this to happen, you have to indicate that you are a company and you have to provide your VAT identification number. If not, they will bill you VAT and you will not be able to deduct that VAT from the Dutch government. Now, when you are selling from outside of the EU, let's say you have a web shop and people are buying from the UK, for instance. UK is no longer under the European Union. In that case, your sales will be at 0%. And you declare that turnover under Section 3A. This is pretty much an export. But you also have to show an evidence that this is a sales outside of the Netherlands and outside of the EU. Delivery list, payment from a foreign country, email, if it is export of bigger goods, custom papers, and things like that. And if it is services that you're offering, then you don't need to put VAT on your invoice because VAT is paid in the location where the customer is enjoying the service. So the VAT rules in the location of your customer is applicable. And when it is outside of the European Union, you do not need to account for that VAT. So you do not put VAT on your service. And when it comes to services outside of the EU, you also don't need to declare it in your VAT returns. You would just have to account for it in your income tax returns. Now we go to the actual filing of VAT returns itself. If you have ever interacted with making VAT returns, you will have a deeper understanding. But if you are new in the process, this training will be useful for you when you start interacting with the VAT returns process. So in this process, in this session, we are looking at what you need before you can file your VAT returns, what to do for your very first VAT return, even when you don't have any sales. How do you complete that form? A look at the intra-community declaration. How do you claim back your VAT deductions? What about when you make mistake, how do you make corrections? And the use of accounting software. What do you need to file your VAT return? The basis of VAT returns is your bookkeeping. And it is simply record keeping of your business activities. It involves your receipts and your invoices being properly arranged in a manner that it is easy to access, easy to verify, and easy to use. And your bookkeeping is where you track all the purchases and the sales you have done for your company. It also includes the supporting documents for these transactions. Most of the time, we are talking about your invoices, your receipts, quotations, contracts, and things like that. There are many ways you can keep record for your business. You can use a notebook to do that. You can use an Excel sheet or Google Sheet to do that. You can also keep a physical folder. But my preference, which I also recommend for everyone that I work with, is to have an accounting software to keep your business records. This is because it is super easy to keep track of what is going on. It is very easy when you are ready to hand over to a bookkeeper. It is very easy for your bookkeeper to take over. And if you're changing bookkeepers as well, an accounting software makes it easy. And when it comes to the VAT returns, accounting software that is developed for the Dutch market also have inbuilt ways to handle the VAT such that you don't need to do a lot of manual work on your own. In order to make your VAT returns, you have to first determine what is the VAT rate that is applicable to your product or service. If you are into catering, you need to know what the tax rates for your catering services are. If you are a hairstylist, you need to know what VAT rate is applicable. If you are selling products, you need to know what VAT rate is applicable. If you're offering a service, you need to know what VAT rate is applicable. For instance, I offer bookkeeping services, 21% VAT rate is applicable. If I am a hairstylist, 9% is applicable to my service. So you need to first check and determine what VAT rate is applicable to the kind of service you are providing. And then you have to track the VAT you have paid on your purchases. You're starting a business or you're running a business, you incur costs in order to run your business. And in the process, you also pay VAT on those costs. You have to track those because you need to report them in your VAT returns and be able to claim them back from the tax authority. And here's an example of an invoice. You have the seller details, the buyer details, and these both include the VAT ID of the seller, the KVK number of the seller, the VAT ID, the KVK number, the address of the buyer and the seller, and then the VAT rate that is applicable to that service. If there is any discount, it has to show. What quantity you have sold, it has to show. What is the total amount before VAT, it has to show. VAT rate and how much is that VAT, it has to show. And then here, you would simply take a record of this VAT you have paid on this service, and you take them when you start doing your VAT returns. Of course, it may not be only one invoice. It might be 10 different invoices. That is why record keeping via a bookkeeping process will make sure that you capture all of these transactions and not miss out on anyone. Now, how do we make VAT returns proper? The first thing you do is update your bookkeeping with the transactions for the last quarter. Right now, it is July. So if we are making VAT returns for July, we have to make sure that our bookkeeping for April, May, and June is in order and we complete it. And the VAT returns, the VAT form is split into different sections. I want to quickly explain those sections, and you will get this as a PDF as well so that you can refer to them in your own private time. Section 1 talks about activities within the domestic market. So these are activities between you and customers within the Netherlands. 1A is for deliveries at 21% VAT rate. 1B is for deliveries at 9% VAT rate. 1C, deliveries that are subject to other rates except 0%. This is very uncommon in day-to-day transactions for most people. And 1D talks about private use of business assets. And 1D, you have to use it only at the end of the year if you have business assets that you also use for private purpose. And 1E is for services that is taxed at 0%, but reverse charged within the Netherlands. This is also not very common in day-to-day activity. It is for specialized industries. But 1A and 1B is very, very common. It's what you deal with or businesses deal with most of the time. Section 2 deals with reverse charge arrangement within the Netherlands. If there is VAT arrangement between you and your contractor or your supplier, this happens a lot within the construction sector, where there is a major contractor who then subcontracts and subcontracts. They can have the VAT reverse charged arrangement. And if your sector is that, then you'll be reporting under Section 2A. Section 3 is for your sales to clients outside of the Netherlands. 3A is for clients outside of the EU, that is export outside of the European Union. And 3B is for exports within the European Union, but outside of the Netherlands. And this is where the reverse charged transactions and ICP declaration falls. Section 3C is for installation work in other EU countries. If you are into installation work, Section 3C applies to your business type. And Section 4 is the services or products you receive from outside the EU zone or outside the Netherlands. 4A is from outside the European Union, and 4B is from outside the Netherlands but within the European Union. When it is within the European Union, the reverse charge principle applies. But when it is outside of the European Union, the reverse charge principle does not apply. And finally, Section 5 of the VAT form deals with the summary of everything. 5A is the total of everything that you have declared from Section 1 to Section 4. And 5B is where you recognize the VAT you have paid to purchases within the Netherlands. You cannot claim VAT you pay on purchases from outside the Netherlands. You can claim that via another means. You can only claim back VAT you paid on purchases made for business purpose within the Netherlands, and you report that under Section 5B. Now we get to the form proper. You assess your form by going to belastingdienst.nl. You go to in login, and you click for undernamers. I believe you can automatically translate this to English as well, and then it will be for entrepreneurs. You log in here, naar mijn belastingdienst zakelijk. And next, you have to log in with your digit code. If you have authorized someone to file the VAT for you, then the person will log in with the second tab. But if you're logging in yourself, you log in for myself and you log in with your digit code. Now, it opens to this screen where you can start your VAT returns and you select Omzetbelasting. It brings you here where you can start your VAT returns. You will see the date that is covering. In this example, this is April to June 2023. And now you can click Start. It then brings you to this screen where you fill out your details, your name, your BSM number, and the period is already populated automatically. And the next, it will ask you, do you have something to declare? You have the option to say yeah or nay. You select no here if you have zero activity to declare during that period. So let's say you have just registered your car vehicle business, you have not even started doing anything. In that case, you simply select no in this section. But let's say you don't have any sales you have made, but you have purchases for your business that you have made, then you can still select yeah and report those purchases you have made, the VAT component of it, the VAT component of those expenses. You can report them under section 5B. But if you have nothing at all to declare, then you just select nay. When you select nay, you can go ahead and submit this tax form. It is closed and you have fulfilled your obligation for the VAT returns. But for the purpose of this lesson, we have something to declare. So we are going to select yes, and then we go to accord. Now I have an example for XYZ coaching services. And during the previous quarter, there was a sales of 30 coaching sessions at the rate of 150 euros. So there's a total turnover of 4,500. 21% is applicable as a VAT rate. That gives us VAT amount of 945 euros. So XYZ coaching services collected 5,445 from his or her customer. But out of this amount, 945 is for the tax authority as VAT. The coaching service also had 2 clients from another EU business, and that gave a total of 300 euros. The invoice she sends to that customer has 0% because it's a business customer, then it is a reverse charged arrangement. So her invoice will just state 300 euros. VAT reverse charged will be mentioned. During the same period, the business made purchases for Google Drive subscription, 30 euros. Again, because it is for a company within the EU zone, 0% VAT is applicable, but it has to be recognized under section 4B. You have to account for that VAT in the Netherlands because that is the policy. The location where the person is going to consume the goods is where the VAT will be recognized. So Google is in Ireland and you are in the Netherlands patronizing Google as a business person, then Google is going to charge you 0%, but in the Netherlands, you have to account for that 21%. And we will see it when we get to the next sessions. You also bought Mac Pro within the Netherlands during the period, and it was 25.95 euros. That gives you 544.95 euros. This you would recognize under section 5B, the VAT amount you would take under section 5B. So now this is what the form looks like. When you open the VAT returns form, this is what it looks like. Section 1A is where we report activities that are 21%. So for this lesson, our activity is coaching services, and it is 21%. It is 4,500 is our sales, 945 is the VAT. You have to report only your sales in the first column and only the VAT in the second column. Sometimes people make mistake of reporting the sales plus the VAT on the first column. That is wrong. Next, we don't have anything to declare under section 1B because the service is under 21%. Nothing for 1C either. Also, there is nothing for 2A for this very business person. And 3A, there is nothing to report there because it's not exporting any goods out of the EU. But 3B, there is a transaction. He had customers from outside of the Netherlands, but within the EU. And there was a sale of total 300 euros that have to be reported under section 3B, just the turnover amount, because the VAT have to be recognized by the customer at the other end. Now we move to section 4A, purchase from outside of the EU, and there was none for this customer, so we don't do anything here. But 4B, there was a purchase from Google, which is outside of the Netherlands, but within the EU zone. So recognize that 30 euros under the Omzet column for 4B. And the 21% that is applicable to that 30 euros, we put it under the second column, and that is 6 euros. So this 6 euros plus the VAT we paid on the MacBook Pro will become our total input VAT when we get to the next screen. So section 3 and section 4 are recognizing your transactions with abroad. Section 3 is the sales you made abroad. Section 4 is the purchases you made from abroad. And for this customer, they were all from within the EU. So we report them under 3B and 4B. Once you have something reported under section 3B, you cannot go ahead. You will be reminded that you have a declaration to make under the ICP regulation, the intra-community supply. You have to click OK to proceed. And then section 5 is where you now recognize. Section 5A will calculate everything you've done from section 1 to section 4, and everything adds up to 951. How did we get 951? That was section 1A. We can go back. Section 1A, where we had 4,500 turnover and 945 VAT. And then we had section 4, we had section 4B, where we had 30 euros of cost and 21% of VAT, which is 6 euros, which we have to declare ourselves in the Netherlands. So that 6 plus the other amount is what gives us the 951. The next is the input VAT, that is 5B. 5B is where we recognize the VAT we have paid on our purchase. Remember, we made VAT, you recall we made the purchase of laptop for 2595 with a VAT of 545. That we will recognize under 5B. But it also includes that 6 euro that we paid for the Google Drive under section 4B. So the total we will recognize will be 551. And you then have to net off the two. You collected 951 from your customers. You paid 551 from you. Sorry, you collected 951 from your customer. You paid 551 to your suppliers. The net of it is what you then have to pay to the tax authority. So for this very example, you will be paying 400 euros to the tax authority. If you did not recognize your purchases, then you will be paying 951 to the tax authority. And that is one of the ways people lose money when they are filing their VAT. You have to recognize the VAT you pay on your business expenses. That is the way you reduce your expenses on VAT returns. So in this case, yes, you made sales and you are making 951 euros. You have to remove the amount you have paid on the purchases you made. And that is VAT on those purchases, 551. That leaves you with a net position of 400. This is what you will pay to the tax office. Once you cross-check everything is in order, you would see the summary, and if you're okay, you click save and continue. And then you can confirm everything in the system and send out your tax form. And that is it. You are done with your tax returns. You can close the system and your work is done. Now, you have to go to this next level of declaring your ICP. But this is only applicable if you have sales with the other countries within the EU. If you don't have sales with Belgium, Germany, Spain, France, then you do not need to do the ICP. But if you have sales with them, then you have to go to the next stage of declaring the ICP. And you access the ICP via this medium. So that's it about filling out the forms for the tax returns. But it does not end there. You have to also pay that VAT to the tax authority. If you submit your form and don't pay the money, you're going to get a penalty, you're going to get a fine. And when are you supposed to pay? You pay the moment you submit your VAT, you should also remit the VAT amount that is due to the tax office. When you make payment, ensure to indicate the payment description that is on the form of the Belastingdienst. The moment you finish submitting your form, you will print it out and you will see the payment description there. You have to also include that reference when you make payment so that they can reconcile it to your name. It can also be that you get a refund, and a refund happens when you have paid more than you have collected, then the tax office will refund you. In that case, you need to provide your bank details and submit it online. To do that, you go back to my belastendings.nl, go to my details or my havens, reckoning number, and here you can fill out your bank details. Claiming your deductions. Your suppliers often charge you VAT when you incur costs for your business. Now you need to keep proper record of these transactions. And you can deduct the VAT from these transactions as VAT input. The tax office will refund you if you paid more input VAT than you collected from your sales. You can also deduct input VAT during the period where you made zero sales. So let's say for this coaching company that the laptop has just been bought, but there are no customers during this period. Then you still go ahead and declare the VAT on that laptop under Section 5B, and the Belastendings will refund you that money. But you have to keep your records. You have to make sure that it is for a business purpose. You may not deduct VAT if your services are exempt from VAT or if you are under the small business scheme. We talked about the small business scheme in the previous session. If you apply for the small business scheme, it means you are not required to make VAT returns, but you also cannot claim VAT back from the tax office. It's important to know that VAT on business lunches and dinner is in most cases not deductible. And VAT on purchases from other countries may not be deducted from the Dutch VAT returns. If you paid VAT from a purchases you made in the UK or France or Belgium, you cannot collect it from the Dutch tax authority. There is a separate form that you can fill, and they will see if the other country can refund you. But the Dutch government cannot refund you the VAT that is not remitted to them. So your VAT form 5B is only for expenses you incurred within the Netherlands. If you have VAT refund to claim from other EU countries, you can fill out this form on the website of the Belastingdienst and see if you can claim your VAT back from that other country. Now, what happens if you make mistake with your VAT returns? It can happen that you discover afterwards that you have made a mistake. You have over-declared or under-declared or whatever the case may be. You can make corrections. If it is less than 1,000 euros, you can correct it in your next VAT returns. If it is more than 1,000 euros, you have to go through a supplementary VAT returns process to make that correction. It's important to note this. And it's highly, highly recommended that the moment you discover there is an error, to make that correction as quickly as possible. It is better that you are the one making the correction than for the tax authority to do their investigation and find out that there are material errors in your tax returns. So when it is more than 1,000 euros, you can make correction by using the supplementary Omzetbelasting, supplementary VAT returns. This is where you make the correction when it is more than 1,000 euros. Now, all of these forms that I have shown you here how to fill, you don't need to do it if you have a Dutch accounting software. They have been designed to automatically calculate these things. You just need to make the right entries at the right places. And the Dutch accounting software has been designed to, to help you with your VAT declaration. Of course, you have to select the right VAT rate, you have to select the right account type, and a couple of things. But using accounting software, you do not need to go through all of these forms manually on the website of the Belastingdienst. You can do them by automating through an accounting software. And I have a few recommendations on the screen. E-bookhouding is very popular in the Netherlands for starters and freelancers because they offer 15 months free. At the moment, they don't offer English option. I spoke with them some time ago and they said they are working on it, but there is no indication of how soon they will have an English option. But I use them a lot for my clients. They offer 15 months free. 15 months free. They offer 15 months free from the date you register with the Kavika. Then Moneybird is also there, and they have an English option. It's a bit more expensive than eBookhouding. There is also the option of Telo. They also have English language option, but it is also more expensive than the other options. So, final tips on this is you need to maintain accurate financial record. Whatever happens, your records need to be intact, just in case the tax office comes knocking at any time to review your books. You have to set aside your VAT money. When your customers pay you, put that money in a separate savings account for the VAT office. Don't find yourself looking for money when it is time to pay your VAT, because once customer pays you, you want to keep the VAT component away from spending. Make your returns on time and avoid the last minute rush. You pay your VAT as soon as you submit your VAT returns. That way you avoid penalty. You have to make your VAT returns even if you don't have any sales, except you apply for the core exemption. Even when you apply for the core exemption, you still have to continue to file your VAT returns until the tax office sends you a letter stating that your application is approved. Of course, seek the help of a bookkeeper or an accountant when in doubt. And you can always call the tax office or the office of Kavika. They are always willing to help. To stay reminded about the VAT timetable, you can download the Betaway Alert app. You can download it and it will always remind you that VAT is due, VAT is due, and that way you don't lose sight of it. And you can always work further with me. I offer one-to-one consultation. I offer bookkeeping services for business owners, entrepreneurs, solopreneurs, and I can also help you with setting up your bookkeeping system. I have talked about accounting software. I can help you set that up so that everything is set up properly. Set up your ledger, your chart of account, and all of that. Make it easy for you to operate your business. And of course, VAT returns and income tax returns, and any other thing that you need around your business, accounting, and taxes. Feel free to connect with me. You can email me, you can check out my website. Let's connect on LinkedIn. Let's connect on Facebook. I'm also on Instagram, but not very active there. So let's stay connected. And yeah, that's it. I had promised a one-to-one session, and I also promised templates as part of bonuses for this training. So I will be sending that in a separate email during tomorrow. Tomorrow I will send that email out. You are able to schedule a date in my calendar for a one-to-one call. And that is to answer your questions that you still want to discuss more, that is beyond this live session. And I will send you a template for the Excel record keeping, so that if you are starting out with Excel, you know what to do and how to go about it. And you will also be receiving the recorded version of this training. And I will also be sending the PDF copy of the presentation. So you have something to refer to when you are doing your VAT returns, basically.